Right now, thousands of pensioners across the UK are missing out on money they are legally entitled to receive. Some of it is sitting in a fund called the winter fuel payment, worth up to £300 a year. Some of it is hiding inside a scheme called the warm home discount, worth another £150. And some of it is locked behind a benefit called pension credit, which on its own is worth an estimated £4,300 a year on average. The rules changed again for 2026, and many people who were told they did not qualify before may now qualify. Some pensioners are throwing away letters from the Winter Fuel Payment Center, thinking they are junk mail or a scam. Others are paying full price for their electricity, when a simple phone call could knock £150 off their bill. And a huge number of people over state pension age have never even applied for pension credit because they assume they earn too much. By the end of this video, you will know exactly which of these 3 support schemes you may qualify for right now. You will also know the exact steps, dates, and phone numbers you need to claim every single pound you are owed. This information matters more in 2026 than it has in years because the rules around pensioner support have shifted significantly. The winter fuel payment income threshold is now set at £35,000 a year, and it applies to your own income, not your partner's. Pension credit has also expanded, with a new housing element being introduced to help more people with their rent and housing costs. Later in this video, I will explain exactly how the £35,000 winter fuel payment threshold is worked out. I will also explain how the new pension credit housing element could unlock extra weekly income for you. And I will show you how just one successful pension credit claim can open the door to council tax help, NHS help, NHS help, and even a free television license. Let's start with the winter fuel payment, because this is the one that catches the most people off guard every single year. The winter fuel payment is an annual, tax-free payment designed to help people of state pension age cover the cost of heating their home. For winter 2026 to 2027, most eligible pensioners in England and Wales will receive between £100 and £300 automatically. You do not need to apply for this payment if you already received the state pension or certain other qualifying benefits. The exact amount depends on your date of birth and whether you live alone or with another person who also qualifies. Here is the part that surprises a lot of people, because this payment is now linked to a specific income threshold. If your own taxable income is £35,000 a year or less, you keep the full winter fuel payment with nothing to pay back. If your income goes above that £35,000 threshold, HMRC will automatically claw the payment back through your tax code or your self-assessment return. Crucially, this threshold looks only at your personal income, so your partner's earnings do not count towards your own £35,000 limit. Let me give you an example to make this clearer, using a woman we will call Margaret, who is 71 years old. Margaret's personal income, including her state pension and a small private pension, comes to £28,000 a year. Because Margaret's income sits below the £35,000 threshold, she keeps her full winter fuel payment with no repayment at all. Margaret's husband earns £40,000 a year from his own pension, but because incomes are assessed individually, this does not affect Margaret's payment. This individual assessment rule means many couples assume they will lose the payment, when in reality one or both partners can still qualify. But here's what most people don't know, because the payment itself is never means tested at the point it is actually paid to you. Everyone who meets the age and residency rules receives the winter fuel payment first, and only afterwards does HMRC check your income for the year. This means even higher earners will see the money land in their bank account before any recovery through the tax system takes place later. For winter 2026 to 2027, the qualifying week that determines your eligibility runs from the 21st to the 27th of September. You must have reached state pension age by the end of that qualifying week in order to be eligible for this winter's payment. If you would prefer not to receive the payment at all, you can opt out by contacting the Winter Fuel Payment Center directly. To opt out for this winter, you generally need to do this before the payment round begins, so acting early avoids any confusion later. Now here is a serious warning that could protect your bank account, and it is something the Department for Work and Pensions repeats every single year. You will never be asked to provide your bank details by text message or email in order to receive your winter fuel payment. If you receive any message asking for personal or banking information to unlock or confirm your winter fuel payment, this is almost certainly a scam. Genuine payments are made automatically once you are confirmed as eligible, with no application, no forms, and no request for your card details. There's another issue almost nobody talks about, and it involves 2 extra sources of support that sit alongside the winter fuel payment. The first of these is called the warm home discount, and it is worth £150 off your electricity bill. This discount is applied directly to your electricity account, usually between October and March, rather than being paid into your bank account. You are likely to qualify for the warm home discount if you receive pension credit, or if you live in a low-income household on your energy supplier's records. Some energy suppliers apply this discount automatically, but many pensioners still need to actively check with their supplier to confirm they are receiving it. If you have not seen this £150 discount appear on your bill, it is worth calling your energy company directly to ask. The second overlooked support is council tax reduction, sometimes still called council tax support, which is handled by your local council rather than central government. If you receive the guarantee credit part of pension credit, you are entitled to a full 100% reduction on your council tax bill. That means your council tax bill could effectively drop to £0, simply because you already qualify for pension credit. Even if you do not receive pension credit, many councils still offer partial council tax reductions for pensioners on a low income. Let's look at John, a 74-year-old widower living alone, to see how these schemes can work together in real life. John receives a state pension and a small workplace pension, giving him a modest income that qualifies him for pension credit. Because John receives the guarantee credit element of pension credit, his council tax bill is reduced to £0 for the year. John also automatically qualifies for the warm home discount, saving him £150 on his electricity bill every winter. On top of that, John receives his winter fuel payment automatically, adding up to £300 more towards his heating costs. Added together, John is potentially saving well over £1,000 a year, purely from entitlements he might otherwise have never claimed. This is exactly why pension credit is often described as the single most important gateway benefit for people over state pension age. Pension credit itself tops up a single pensioner's weekly income to £238 based on the current 2026 to 2027 rates. For couples, pension credit tops up combined weekly income to £363.25 under the same rates. If your income falls below these weekly amounts, pension credit makes up the difference, even if the gap is only a few pounds a week. But here's the thing most people miss, because even a successful claim for just £1 of pension credit can unlock thousands more in other support. This is often called a passported benefit, which simply means one benefit automatically opens the door to several others. Once you receive pension credit, you may also qualify for help with NHS costs, including free dental treatment and help with prescription charges. You may also qualify for a free television license once you turn 75, which alone is worth roughly £170 a year. And as we already covered, pension credit can also mean a full council tax reduction and automatic entitlement to the warm home discount. Despite all of this, government figures have repeatedly shown that a large proportion of eligible pensioners still do not claim pension credit at all. Estimates from the Department for Work and Pensions have suggested that hundreds of thousands of eligible households were not claiming pension credit in recent years. Many people simply assume their savings or their small workplace pension automatically rule them out, when in many cases this is not true. Now let's talk about the biggest change for 2026, because this is the update almost nobody has fully explained yet. The government has been working to introduce a new housing element within pension credit itself, rather than housing support being a completely separate benefit. Traditionally, pensioners renting their home had to claim housing benefit separately from their local council, in addition to claiming pension credit. Under the new approach being introduced for new claimants from 2026, this housing support is intended to sit within pension credit directly. The stated aim of this change is to simplify the system, reduce paperwork, and help more eligible pensioners actually receive the housing support they are owed. This matters because thousands of pensioners have reportedly missed out on housing support in the past, simply because the old system involved two separate claims. If you rent your home and have not looked into this recently, it is worth checking your entitlement again under the updated 2026 rules. Even homeowners are not left out, because pension credit can also help with certain housing costs, including mortgage interest, through a scheme called Support for Mortgage Interest. Let's look at one more example. A woman we will call Susan, who is 68 and renting a small flat in Cardiff. Susan assumed she earned slightly too much to qualify for pension credit, based on rules she remembered from several years ago. Under the updated 2026 calculations, Susan's actual income still fell just below the qualifying threshold once her rent was properly taken into account. By making a fresh claim, Susan not only received weekly pension credit payments, but also unlocked help with her rent through the new housing arrangements. This single claim also passported Susan into a full council tax reduction and the warm home discount on her electricity account. Susan's story shows exactly why it is worth checking your eligibility again, even if you were turned down or ruled yourself out in previous years. There's another issue almost nobody talks about, and it is the risk of losing money simply through inaction rather than ineligibility. Pension credit claims can sometimes be backdated by up to 3 months, meaning a delay in applying can mean losing money you were already entitled to. The winter fuel payment opt-out and claim deadlines also move slightly every year, so missing a specific date can mean missing that year's payment. This is why checking your eligibility early in the year, rather than waiting until winter arrives, puts you in a far stronger position. Let's do a quick recap of everything we have covered, so you leave this video with a clear plan of action. The winter fuel payment is worth up to £300, paid automatically if you are of state pension age and your income is £35,000 or below. Remember that this £35,000 limit is based on your own individual income, not a combined household figure with your partner. The warm home discount is worth £150 off your electricity bill and is often linked automatically to receiving pension credit. Council tax reduction can bring your council tax bill down significantly, and in many cases down to £0 if you receive guarantee credit. Pension credit itself tops up weekly income to £238 for a single person, or £363.25 for a couple. The new pension credit housing element, being introduced for new claimants from 2026, aims to bring housing support directly into your pension credit payment. A single successful pension credit claim can also unlock NHS cost help, a free television license at 75, and further council tax support. If you take one action after watching this video, make it checking your own eligibility for pension credit, even if you were refused in the past. You can check your eligibility through the official Gov UK Pension Credit Calculator or by calling the Pension Service helpline directly. Always be cautious of any message asking for your bank details in relation to these payments, and only trust official government channels for your claim. If this video helped you understand your entitlements a little more clearly, please consider giving it a like, as it genuinely helps this channel reach more people who need this information. Subscribing means you will not miss future updates, because these rules around pensioner support tend to change every single year without much warning. If you know a parent, grandparent, or neighbor who might be missing out on any of these payments, please consider sharing this video with them directly. Thank you for watching, and we will see you in the next video with more practical financial guidance for your retirement.